Hi everyone, my name is Shanzeh Shah. I'm a barrister at All Square Tax Chambers. I'll speak a little bit more about myself at the end of the talk, but today what I'm going to be taking everyone over with is the transfer of assets abroad. In short, they're called the TOOAA rules. And what we'll be doing today is basically a little bit of background about what TOA is, and then the judicial decisions that we've had recently, and where do you kind of see, the transfer asset abroad rules going forward in the future. So that's kind of going to be the trajectory. And then at the end of it, you'll have, as you guys have had in other sessions, the four multiple choice questions to confirm whatever that I said has actually gone in. So hopefully this is something that can help your clients, because it is really an area that a lot of international clients do have to deal with. And you might not even think international, UK-based clients who are transferring their assets abroad or have, assets abroad and then are gaining some sort of benefit from it. There are serious tax consequences. And these rules, let's just say, have not been the most helpful for everyone involved. So the presentation today is going to be a brief overview of the rules, their relevance. It will also look at the Income Tax Act 2007, and I will be focusing on Section 71731 and 333. If you have time, you'll see those sections are really the most relevant ones, and these ones for applications to work out essentially if the transfer of asset abroad rules apply. And then we'll look at, some other relevant legislation which may help. But obviously, when you are applying in practice, I would always say you need to have a broader knowledge of all the legislation, but that would basically take all the time if I did that. And then we'll look at a case this year, which was Moran and HMRC, which was a very interesting case. And whilst it wasn't groundbreaking, it confirmed a lot of what HMRC and the way that HMRC operates. So it's a very helpful case, and we'll kind of look into that and see in detail, actually, one defense. So I'll talk a little bit about this later, but it's called a motive defense, and it's kind of what it does what it says on the tin. What was your motive in movement of the asset? So that's kind of what we'll be looking at. But it's not as simple because the application makes it very complicated, and mostly everyone finds it difficult in application and, not that helpful as a defense. But it's kind of the main defense that can be used if you have this scary TOAA legislation invoked against your clients.